With pretty much all of my stocks in the red this last month, my portfolio got absolutely slapped and ended up underperforming the market as a whole. It's not all bad though, as it's creating some pretty solid buying opportunities in my portfolio right now, which we'll be talking all about in this month's portfolio update. But first, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know which stocks you picked up in the last month. I'd be curious to hear what you've been adding to your portfolio. But anyway, guys, getting into it, taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to it in the description of this video. I hope you check it out. But anyway, this tells us my portfolio is currently valued at $43,677.84, which is multiple thousands of dollars lower than this time last month. To be more specific, I am down $2,762 just in the last 30 days. And looking at how this is broken down, my portfolio lost about $3,000 in share price returns just in the last 30 days. That is so crazy. But on the bright side, I had a really solid month of dividend income and I brought home almost $200. But anyway, in terms of percentages, this is a near 6% loss just in the last 30 days, and I am getting crushed by the market as a whole right now. As we can see here, in this time period in the last month, the S&P was up nearly 1%. The Dow Jones was down about 3%, but still I am trailing it by about 3%. And then the Nasdaq's pretty much a complete 180 from what I'm doing. It's up about 6.5% while I am down, like we saw, about 6%. And then year to date, guys, I am officially in the red. I am down 2% so far in 2023 and getting crushed by all three major indices. The S&P is up 10.3%. The Dow Jones is barely in the green, up 0.5%, and the Nasdaq is crushing it, up 24.25%. And then taking a look at the performance over the last year, the same is true, guys. I'm just getting crushed. I'm down 5.5%, while the S&P is up nearly 3% in the last year. The Dow Jones is up about 1.6%, and the Nasdaq is up 7.3%. I am getting demolished. But the silver lining here is that even though those share prices are coming down and they're doing so aggressively, as long as I keep buying and as long as I keep accumulating shares in my portfolio, my dividend income is just going to continue growing. And that's exactly what happened, guys. Going back over to my spreadsheet, my annual dividend income is $2,061.41, which is about a $26 increase to last month's reading, where my annual dividend income was recorded at $2,035. And looking at it on a year-to-date basis, so far this year in 2023, I have added nearly $150 of annual dividend income to this portfolio, which, if we do some math here, guys, assuming that I'll be able to grow my income by at least that rate in the back half of the year, that means I should be able to hit at least $2,200 of annual dividend income by the end of the year. I think that's totally doable, but if I'm being honest, guys, I have my sights set on $2,400. It'd be awesome to be bringing in $200 per month of annual dividend income on average, but let's see what happens, guys. I know I'll get there sooner or later. But anyway, switching gears, guys, getting into the best and worst performing stocks in my portfolio. As you can see right here, in the last month, there were only 2 stocks that actually went up in share price. The rest of them went down. And starting here with Apple, just in the last 30 days, it's up 4.5%, which is pretty dang solid. But look at this year-to-date performance, guys. They are up over 40% so far in 2023. And taking a quick look at my Apple position, I only have about 6.6 shares, so nothing too crazy, but my average cost is looking really nice, $129.45. And with its run up in share price this year, this leaves me with a gain of about 37%. I'm not complaining. And then the other stock that saw a gain in my portfolio in May was Owl Rock Capital Corporation, who was also up about 4.6% in the last month, which puts them at a year-to-date gain of about 14%. That's really solid for this company. And once again, taking a quick look at my position, I have 115.4 shares, but it's really not an expensive stock, only about $13.50 per share right now. And that's also my average cost, which doesn't leave me with really any market return. In fact, I'm actually down about 0.5%, but on a total return basis, it's doing really well, up 13%, which makes sense because this is such a high yielding company. So most of those returns are going to come from dividends, as we can see right here. It's got a forward yield of 9.83%, so definitely a high yielder. But anyway, switching gears and looking at my worst performers, you can see that there's a handful here who are down double digits just in the last month. Starting here with Starbucks, who was down nearly 15% just in the last 30 days, and they dropped after they reported their quarterly earnings, which are actually solid. They beat on both the top and bottom line, but still apparently the market heard something that it didn't like. And then on a year-to-date basis, Starbucks is down 3.16%, so just barely in the red there for 2023. Another one of the bad performers I wanted to hone in on was AbbVie, guys. In the last month, they are down 9.78%, a really big drop for this company, which puts them at a year-to-date loss of 15%. Once again, a very big drop. But anyway, guys, looking at the rest of the bad performers, I mean, we saw the AT&T and Verizon were both down double digits, but in addition to Starbucks and AbbVie, 3M was down quite a bit, down 9.5%. 6.5%. Chevron was down a lot. Procter & Gamble, WP Carey going all the way down. KRC down 6.5%. And on that note, switching gears and talking about my transactions for the month, guys, I've been taking a bit more advantage of this KRC dip that just doesn't appear to be stopping anytime soon. But anyway, in the last month, I invested nearly $400 more into KRC and picked up 14 shares. I also added about $230 to Lowe's and picked up 1.15 shares. And I also invested a little bit more into Owl Rock Capital Corporation, just under $100, picked up 7 more shares, along with a $250 contribution to my Roth IRA throughout the month, which brings my total purchases in May to $969.01. And now giving you a quick update on my Roth IRA, guys, on M1 Finance, my Margarita Money portfolio, it was actually up above $4,000 yesterday, which was the first time I think I've ever seen it up that high, which is a pretty cool milestone. But anyway, in the last month, I'm down about 2.7% in this portfolio, which puts me at an all-time loss of about 7.5%. And if we take my near $4,000 value of this Roth IRA that's bringing in $121 of dividend income and add it to my $43.6 thousand main portfolio that is generating $2,061 of annual dividend income, this puts my total portfolio value at $47,650.49. And every single year, I am bringing in about $2,183 of annual dividend income, which amounts to about $182 every single month on average. I'll tell you what, guys, across these two portfolios, we are getting pretty close to $200 per month. But anyway, switching gears now and taking a look at my watch list. This is my due diligence list right here, which are all the stocks that I'm currently chewing on, I'm doing some more research on, spending some more time with them. And the only change I made to this watch list in the last month was I removed CVS, who was down another 7% just in the last 30 days, another big drop for this company. But looking at their dividend stats, I ultimately decided that the dividend growth just wasn't there for me. And those are the companies that I really want to emphasize moving forward, those high growth dividend stocks. And so I just think in that regard, there are better opportunities on the horizon. Like Williams-Sonoma, for example, who is still sitting on my buy list. I do plan to add this company to my portfolio at some point, but for now, I'm just kind of watching it to see what the share price does. I mean, in the last month, it's down another 5.8%, which puts them officially in the red in 2023. They're down 0.5%. And I do think the valuation's looking pretty good. An 8.5 PE ratio. They're pretty close to their 52-week low. But I do think this company will continue to trickle down in share price. That's kind of what my instinct is telling me. So once again, I'm just kind of watching it for now to see what it does. And in the meantime, I'm looking forward to taking advantage of some of the buying opportunities that are already in my portfolio. Like Realty Income, for example, who is down 5% in the last month and is down nearly 8% just this year. WP Carey is another one, and they're seeing an even bigger drop in the last month. They are down 6.6%, and year to date, they are down 11.4%. Johnson & Johnson's another one. They are down 5% in the last month, and then year to date, they are down about 13%. And then the last one, I always keep this company in the back of my mind, Procter & Gamble, who is down about 9% just in the last 30 days, which puts them at a year-to-date loss of about 6%. So they've really come down in share price this last month. So overall in my portfolio, I think all of those are looking like pretty attractive buys right now. And if you want to learn about some more attractively valued stocks, then check out this next video right over here, where I'm telling you about 5 that are deeply discounted, and they all look like great pickups right now in the month of June. So click right over here to check them out, and I'll see you in the next one.